Is the Bitcoin bottom in, or are we in for a lot more pain? Well, in today's video, I'm going to be discussing just that topic. We'll be taking a look at the Wyckoff, taking a look at what some of the big players are doing, taking a look at some of the most common indicators that we look at to determine if a market is cooked or not. My name's Lark. Every day I make videos talking about cryptocurrency investing, so if that's a topic that you would like to learn some more about, make sure that you subscribe to the channel, gently tap on the thumbs up button for the YouTube algorithm, and of course, click on the notification bell to know when I put out a new video. So let's go ahead and get into the charts. So as you can see here, Bitcoin yesterday actually came way down here, $28,800 on Coinbase. Massive sell-off on the back of that news out of China that they're cracking down on bank accounts for people buying cryptocurrencies, that Chinese cryptocurrency miners are fleeing the country en masse. That spooked the market big time. Of course, we have miners selling a lot of Bitcoin right now as well. They haven't been doing this for some time, but over the last couple weeks, they've really ramped up that selling. We can see the proof of that right here. This is miners dumping supply in a weak market. This is not when miners traditionally would want to be selling. They usually sell into strength. They don't sell into weakness. This is miner panic selling that we're looking at right now, because as we talked about yesterday, they've got to have money to move all of their equipment over to Texas, or they don't have enough money to move to Texas and they're selling everything that they have, trying to recoup their losses or to pay out investors who invested in their Bitcoin mining farm. So it's been pretty dramatic price-wise. This is a super volatile market. I'm reminded of the old saying that the volatility is the price that you pay for performance. You don't get these massive gains in Bitcoin without the massive dumps in Bitcoin, and of course the entire cryptocurrency market. We're talking about Bitcoin in today's video, but Bitcoin is the tip of the spear. It leads the cryptocurrency markets. Now, what is nice to see is that almost 20% pump back up off of the lows of yesterday. That being said, let's not count our chickens yet. We are far from out of the woods here. That could just be a temporary relief rally before more downside pressure comes in, especially if we see miners dumping more supply. We have had more inflows today from miner accounts into exchanges. This could, of course, create more sell pressure in the short term, so just be aware of that. This is the pressure that we have going on in the market right now, and we are still well below the 200-day moving average. So until we reclaim that very key line, we are in a bearish trend. The bears are in control of the market. They're in the driver's seat. The bulls are in the back seat, wishing that they could get back in charge of the market. We need to see Bitcoin closing above $43,000, realistically probably around $44,000. Daily candle closed above $44,000 be very nice right now. So, is that the bottom? Is that it? Well, maybe not. We're going to discuss both sides of the argument here. So this is the Wyckoff accumulation pattern. Now, if we are in the Wyckoff accumulation pattern, then that could have been our spring. You'll notice that the spring can often be a situation where the price does come in a little bit lower than the major selling climax that happens at the start and the secondary test afterwards. We could also be in a secondary test situation because realistically, we didn't go that far below, just $1,000 below the initial selling climax. That could be a spring situation here, though. If that is a spring situation, then get ready for Bitcoin to start rallying higher over the next week or two, potentially on the back of some good news, hopefully. However, we could just maybe be at our secondary test and we are just ready to now range sideways, because this has actually been a pretty short accumulation period, if it is indeed an accumulation period. You see, the distribution period lasted for around 3 months. Our accumulation period has only been going on for, a little more than a month at this point. So that's something to keep in mind. Not to say that the accumulation period has to last the same amount as the distribution period, but it certainly could. It would be a very short accumulation period if it were to be playing out like that. But that could just be actually our second test here. So let's see how it plays out over the coming days. We will know if we get a breakout that was indeed the spring. So let's watch for Bitcoin to break above this really key area around $40,000. We start closing some daily candles on volume, of course, above $40,000 by the end of the week. Then that would have been our spring situation. Otherwise, let's expect it to continue ranging around. Now, here's something interesting for you to think about before we start talking about the Wyckoff distribution pattern. This is from Ki-Young Ju. He is the CEO of CryptoQuant.com. These guys do a lot of on-chain analysis. He says, I hate to say this, but it seems like the Bitcoin bear market has been confirmed. Too many whales are sending Bitcoin to exchanges. This traditionally, as you can see on the chart, marks periods where we have major sell-offs that are inbound, right? So this precedes major sell-offs. So we can see here we had a massive spike in whales sending Bitcoin into exchanges, followed by a dramatic 50% drop here. We had whales sending Bitcoin into exchanges after the top here in 2019's bear market rally, before, of course, the dramatic drop in March. Whale selling, again, picking up right now. So pretty interesting to see that happening. And of course, it has been an indicator in the past that has shown that we are in a bearish trend, that the whales are kind of starting to capitulate, so to speak. Now that brings us up to this. There are some people who still believe that we are in a Wyckoff distribution phase and that the price action that we're seeing right now, we're actually just in phase D of the distribution phase, that we've seen the this sign of weakness coming through. We've now, of course, got that lower low, which, you know, that is exactly what this is. It's either a spring or it's that lower low situation. You don't really want to have lower lows. That just says that we are in a downtrend and that you can expect more pain to come, of course, unless that is the Wyckoff spring, at which point we could have some very big fireworks coming for us in the not so distant future. Now, the believers of thinking that we're in phase D right now would then indicate that we're going to come into phase E pretty soon, which is a very, very bearish scenario for Bitcoin, basically meaning that we're probably looking at another 50% drop for Bitcoin, that we're going to go down to like $15,000 or something like that. I tend to believe, personally, not that we are in the distribution phase right now, but that we are in the accumulation phase at the moment. Unless we get even more bad news. I mean, just think about this. China's basically come out full-on Bitcoin ban again, and we are still closing the daily candles above $30,000, right? The people who are still holding on to their crypto, the people who are still holding on to their Bitcoin, those are strong hand holders, right? We've shaken out a lot of the new money at this point. A lot of the tourists, so to speak, have packed up shop and gone home. So I'm not sure that we are in this phase D situation of a distribution, but that we are actually potentially in the phase B or maybe even in the phase C of the accumulation pattern. Time will tell if we are in the phase C or not, and we get that sign of strength coming through, or if this was just a secondary test and we're going to be actually ranging sideways for another month or something like that before eventually getting our spring moment. Here's some interesting data for you as well. This is from Sam Trabucco. Now, Sam, he is one of the head traders for Alameda Research. Alameda, that's the quant arm of FTX, and Sam Bankman-Fried, the owner of FTX. So these guys are basically doing the trading here. He said Alameda's new long positions are sure hoping that the markets are going to go up, basically. So here we have these guys who have a lot of people sitting down, researching the markets all the time with a lot of money on the line. They're long. They're long on the market right now. So this is from today. This is him announcing all the different reasons why he is getting keen on the market, why he's long on the market, why he thinks that the FUD is a bit too much, so to speak. So pretty interesting to see all these conflicting signals at the moment. I just think it's important to point out, too, that, Nobody definitively knows what's going to happen next. This is one of the things that you as an individual investor and trader need to realize. That's why it's so important to not listen to me or another YouTuber or what people are saying on Twitter or anywhere else. You have to make your own decisions. I'm sure you can listen to us and get some ideas, maybe confirm some of your own opinions or challenge some of your own opinions, preferably, right? But you still, at the end of the day, have to make those calls for yourself because we're all just working on different models and different ideas and opinions of our own. The most important thing, of course, comes down to managing your risk and all that stuff, as we talk about so frequently here on the channel. Now, before we get into some more models, I just wanted to say, if you're not yet a subscriber to Wealth Mastery, you've got to check it out. This is our weekly investor report. Every single issue of this report has a deep dive on an altcoin, trending coin analysis, an interview with an industry leader, a step-by-step decentralized finance tutorial, top-tier technical analysis, the latest token sales, the latest airdrops, and much, much more. All of that for less than $10 a week. So if you're serious about investing in crypto, this is definitely something for you to check out. Use the link down in the description to learn more about becoming a member today. Now, let's go ahead and look at some more indicators that are actually showing that we're not in a bear market in the same way that we're in a bear market back in 2018 or in 2015. The market right now is looking very, very different according to a lot of major indicators, which would say that we're more likely in the Wyckoff accumulation area versus in the Wyckoff distribution area. Something for you to think about here. So currently, you can see here, this is the 200-week moving average heat map. So never before, and look, hey, there's always a first time for everything, just point that out, but never before have we had a market top for Bitcoin without actually having a red dot. So that's showing that the market's massively overheated, right? Never happened. You can see here, all the market tops, all the bull market tops had these red dots. Now we can also see that we haven't even had an orange dot, right? We haven't even had that kind of powerful market uptrend. And you might think, wow, the market's really crazy. Lark, what the heck are you talking about? Well, it hasn't actually been that crazy according to the 200-week moving average heat map. Although we can see similar kind of price situations. For example, here we have these big run-ups and then massive cool-offs, right? So that could be a situation that we're in right now in terms of having that big run-up. This is a cool-off period before we start taking off again. That being said, we have also never had a blue dot before continuing higher in price during a bull market cycle. So also something for you to consider. This is the 2-year MA multiplier. We have never had a Bitcoin bull market top without seeing the price above this top line here. You can see it actually ran into that line as resistance here, but we didn't actually go over the top of it. It happened in 2017, happened in 2013, and as well as the earlier 2013 early bull rally followed by the bear trend down during the 2013 market before, of course, finishing the year on the bull market high. We could be in a similar kind of 2013 situation here right now, although we haven't yet closed above this top line here. Not to say again that we have to, just that it's never happened before. We've had a market top and it hasn't. This is the Bitcoin logarithmic growth curve. So the current market cycle, you can see right around here that we've come up just above the midline here. So you can see this midline, this yellow line right here in the middle. We've come up above that midline, but we haven't actually come near the top of the growth curve. So you can see, again, we can look back here. Historically, we had these market peaks in June 2011. We had another market peak here, December 2013. That was, of course, right around the time that the first China FUD, the first major China FUD came in, where all the news that we're hearing now happened back then. They're just reiterating that news again. You can also see here, 2017 came out to actually touch the top of the growth curve here as well. Bitcoin's been trending pretty well within this growth curve over time. Now, we haven't finished a bull market top without actually coming really, really close to or touching that top. So that's kind of where we are right now. We can see back here, again, 2013, we actually had a burst above the center line, just like we've had now, before going into basically a downtrend for months on end. Again, that's that mid-cycle bear trend before continuing a bull cycle later on in the year. This is the pi cycle top indicator. Now, a lot of people were screaming that, well, the crossover of this meant that a bear market was here. And yeah, it definitely did indicate a bearish trend coming into the market. No doubt about that. However, it doesn't necessarily mean that we're going to enter into a 3-year bear market now. Again, I'd like to point out that we actually had a bearish crossover as well back in 2013. So after the initial major rally, we had a major cooling off period lasting for months. This lasted for about half a year before the markets completely took off again and went on to reach epic new highs. We can also have a look at this here. So this is the Bitcoin price history per halving epoch. So let's zoom in on this a little bit here. You can see each epoch scale is 20 times larger than the prior epoch. So you can see how dramatic the cycles have been so far. And yet here we are. This is where we are for the, make that a little bit smaller for you so you can see here. It's just so tiny. It's just so tiny. It barely registers. That is where the current cycle is. That's where the current cycle is. So it would be like saying that the bull market's over here in 2013 or here in 2017. This is where we are right now. The likelihood, again, based on this model, is that we're going to see the year ending up around $200,000-$300,000, which I know sounds incredibly hard to believe right now. Incredibly hard to believe for a lot of people out there. And of course, your altcoins are going to go absolutely insane as well. And no one can predict the future. We could have more FUD news for months on end with all kinds of bans and regulations and crackdowns, and it's going to be worse than anyone could imagine. Or we've gone through the worst of it, and now we're going to start moving into recovery. Institutions are going to start piling back in. The price is going to go totally crazy, and we are going to basically make this model match just like the other ones have matched. And we're going to see the price moving up dramatically by the end of the year. This is the exact same kind of stuff that happened in 2017, exact same kind of stuff that happened in 2013. And nobody ever believes that the price of Bitcoin is going to reach those highs until it actually does. Until Bitcoin crossed over $20,000, I had people that posted daily in the comment section saying that Bitcoin is never going to go above $20,000 ever again. And guess what? It did. It did. Nobody ever believes it's possible until it's done. I believe it's possible. I believe it's possible. Let's just get it done now. Here's another bit of hopium chart for you. This is from Crypto Calio over on Twitter. He said, "Is it really so hard to believe? Just embrace the bullishness, guys. Embrace the bullishness. Have no fear in these markets. I know it's rough. I know it's crazy. Crypto's a crazy market. The volatility, it can keep you up at night, especially if you're new to the market. But this is a possibility. Not saying that's what's going to happen, but that these bullish price models are a potential thing. Again, look back here. If this happens, right, if what has happened before so many times ends up happening again, then that's actually not that crazy, is it? Nope, not that crazy at all. And just some quick news here for you before we finish up for today. All that Chinese FUD, miners being kicked out of the country and all that stuff. So what's actually happening right now? The miners are already moving. They've already announced that they've made moves already. Some of the biggest miners have already left China. Think about that. So we've already seen miners who have announced that they've already got their machines up and running in Kazakhstan. We had a big Chinese miner posting today, "Hey, just arrived in Texas. Love the barbecue." It's happening. It's happening. The miners are already getting out of there. They're moving right now. This is a massive geographic shakeup for Bitcoin, But it's not the end of Bitcoin. The miners just move somewhere else where the regulations are better and they're more welcomed. And there's a lot of people looking to welcome those Bitcoin miners around the world. So just, keep that in mind. Also, Van Eck, these guys have been trying to get a Bitcoin ETF for ages now. These guys have filed for a new Bitcoin futures mutual fund with the SEC. Just a reminder that we're in this constant state of progress for the markets. We have all these new financial products coming out all the time, regulated and unregulated. Lots of stuff is happening. The big money guys, they're not giving up on Bitcoin. They're not walking away. The amount of building and hustling going on, trying to get stuff to happen. Incredible. Absolutely incredible what's happening in the markets right now. You have to see the big picture and try and actually see the forest from the trees here to understand all these people who are trying to push this industry forward and are going to be successful at pushing this industry forward. And just a final thought. The Bitcoin ETF, it's coming one of these days. It's coming probably sooner than a lot of people realize. And when the Bitcoin ETF does come, a lot of people will have capitulated. A lot of people have been shaken out. Oh, Bitcoin's got so boring. They'll be on the sidelines, sitting in tether, waiting to buy a dip that just never comes. The ETF gets approved and the price is going to skyrocket like freaking crazy. Hopefully it gets approved this year. We've been waiting a while. Hopefully the new SEC will actually approve it for us, but we'll have to wait and see until they do. But as always, even if we're in a bearish trend right now, I remain incredibly bullish on the future of cryptocurrency. When you look at everything that's happening, how can you not be bullish? I know temporary price downtrends like this can really mess with your head. But zoom out, think long term, we are going to be fine. Anyway, just my 2 satoshis, of course. What do you think? Are we right now in the Wyckoff accumulation period? Maybe we've seen the spring, maybe we haven't seen the spring, but we're definitely in the accumulation period. Or do you think that we are in the Wyckoff distribution period right now and that we're about to see the price tank by another 50, 60%? Let me know down below in the comment section. Thank you so much for watching today's video, and peace out till next time.